Good day everyone, and welcome to the Value Machine video about Netflix earnings. So today we are going to talk about Netflix earnings. They released earnings last night. The shares are currently rising 3.5%. They beat on some figures. I will get to that. But before, I want to show you how to get the results step by step, because if you go to CNBC and you type over here search quotes, if you type here Netflix, okay, you will get to that page that we got right now. You see that there's news, profile, earnings, peers, financials, options, and ownership. If you go to financials, they still didn't update the financial results of yesterday quarterly earnings. So what you can do is you can go to Google, type investor relations, Netflix, you click the financials, and here you got the third quarter earnings. You have video interview, letter to shareholders, financial statements, and the transcript. Okay, I'm gonna go to the letter to shareholders, and with it I'm gonna show you guys that in this table you can get almost everything you want to know about Netflix earnings and how it did in the third quarter. So this is the table that we are going to look at, and we need to understand what we're looking at the beginning. Okay, so the table starts with the third quarter of 2018, where they show multiple figures that we're gonna talk about in a minute. And then the table ends with the Q4 2019 forecast. Okay, so here we got the results from the third quarter of 2018 until the third quarter of 2019. And then you have a column where they try to show their forecast. And I will explain also later why it's important to look at this thing over here. So let's start with the revenues. We can see that Netflix reported $5.245 billion of revenue in the third quarter of 2019, and it missed analysts' expectations. Analysts were expecting that the company will report $5.25 billion for the third quarter of 2019, and they missed on that. If we take a look at the year-over-year growth, Netflix grew its revenue by 31.1%, which is a nice thing, but still you have to take into account that Netflix PE ratio is high, meaning that those results might already be priced in the stock price, but we will not touch on that in this video. Operating income, we can see that the operating income reached $980 million, almost $1 billion for the third quarter of 2019. And we can see that it doubled itself in 1 year. In the third quarter of 2018, it was $481 million, and it doubled itself in the third quarter of this year. Operating margin, we can see that the operating margin is also improving, climbing from 12% in the third quarter of 2018 to 18.7% for the third quarter of this year. Net income increased and also reached $665 million, and diluted earnings per share, where analysts' expectations were at $1.04 per share, came in at $1.47 per share, which means that they beat on earnings per share. Now we are going to talk about three important figures for Netflix, and it's the global streaming paid memberships and year-over-year growth, and global streaming paid net additions. Why it's important? Netflix is currently heading into an aggressive competition with companies like Apple and Disney. Both of those companies have plenty of cash on the sidelines where they can invest their own money into their platforms and into their own original content without taking any debt. But on the other hand, we have Netflix, which is producing original content, and I will show you in a minute how they burn cash in order to make this content, and it's a cash they need. So let's take a look at the global streaming paid membership. It reached 158 million in the third quarter of 2019, and if we take a look at the global streaming net paid addition, it came at 6.77 million net additions for the third quarter, which beat analysts' expectations but missed Netflix's own expectations. So currently I want to talk about the net cash used in operating activities. We can see that Netflix used $502 million in operating activities, And when we say cash flows from operating activities, we talk about the focus on the cash inflows and outflows from the company's main business activities of buying and selling products and providing services. And if you want to look and understand exactly how they got to the figure of $502 million, you can go to page 12 and see how they started from the net income and they added and deducted some figures to get to the final net cash used in operating activities figure, which is $502 million. Free cash flow, it came at a minus $551 million. Free cash flow represents the cash a company generates after cash outflows to support operations and maintain its capital assets. If you want to see how they got that figure, you can go back to page 12 and see how they calculated it. They started with net cash used in operating activities, $501 million. They deducted those two items, acquisition of DVD content assets, purchases of property and equipment, and then they added change in other assets, and they got to the non-GAAP free cash flow, which was $551 million, which we have over here in this table. Now let's talk about another important thing, which is the adjusted EBITDA. EBITDA is earnings before interest, tax, depreciation, and amortization. This figure can show us how the company is doing, how the core business is doing, because we take out the interest, we take out the taxes, we also take out the non-cash expenses, and we see how much the company is actually making money without those things. It's kind of tricky because you also have to think about the interest and the tax that the company have to pay in the future. So once you look at the EBITDA, keep in mind that it doesn't show you the full picture. So my friends, we got to the end. Let's talk about the forecast of the fourth quarter of 2019, and by this we will end the video. So they are forecasting that the revenue will be $5.44 billion. Year over year growth would be 30% if we compare it to the fourth quarter of 2018. Operating income should double from $216 million to $475 million. Operating margin also should increase to 8.7%. Net income will also double to reach $232 million. And at the end, diluted earnings per share would reach 0.51 cents. And the last thing is the global streaming paid net additions. They think that they will add 7.60 million subscribers. For this figure, we have to wait and see if they're gonna miss their own expectations again. So I want to thank you so much for listening and hanging on to this video. I hope it added value to you guys. So thank you very much and have a great day.